All right, good morning, everybody. And here I am with Nancy, and I am going to be demonstrating a couple of things today. One, putting on an SPX trade, and also to demonstrate a strangle and putting some on in trade diff. So Nancy's trying to learn how to trade the zero DTEs as well as some strangles in her account. So that's the purpose of today. So I'm going to go ahead and do a screen share. Nancy, does that sound good?
Sure.
Okay, so let me share screen one and tell me when you can see my
Yes.
POS account. All right, I'm going to move some screens around and I'm going to show you the SPX. So first, let's just chat a little bit about a strangle while we're waiting here for the market to open in 3 minutes. Yesterday, I put a strangle on in Target and Lowe's. And one of the things I like to do is to trade strangles around earnings. And the reason I like to trade them around earnings is because implied volatility is high during earnings. Any idea why that might be?
Because they're speculating
Because people are speculating.
that it's going to go up.
Yeah, it's when implied volatility is high, it means that the perception of risk in that stock is high. And when the perception of risk is high, the option prices are elevated, much the same way as if a hurricane was headed towards Florida. You could imagine that hurricane insurance would be quite expensive if you had a home on the coast of Florida. So if you're Warren Buffett, and you've got a good actuary, you know what the risk is and the appropriate price is, but the premiums are going to be high. So I like to sell options when premium is high, and then to get out of it when there's a volatility crush. So yesterday in Target, I sold both Target and Lowe's. I collected, let's see, I don't recall exactly the premium that I collected, but you can see that Target, the 10 delta was between this 128 put and 150 call. Now this is an IRA, so I put on an iron condor in here instead of a strangle. And the reason being in an IRA, you cannot trade an undefined risk. So by buying the wings, these small wings here, it turns it into a defined risk trade, and I'm able to do it in my IRA. So as you look at the short legs are 128 and 150. So Target here is currently trading at 148. And so as you see, it's between the range. It's still south of that 150. So I would say that that one worked. That Target trade worked, and you'll start to see a lot of the volatility come in today. As you look at Lowe's, Lowe's is currently opened at 161, and my range for Lowe's was above 148 and south of 175. So both of those earnings trades are going to work for me today. So if I need the buying power, I'd take those guys off because I could probably close it for maybe $50 and, probably collected about 300 in credit. So if I needed the buying power, I'd take them off. But if I don't, I just go ahead and let them expire worthless by Friday. So let's take a look at SPX, which is our first objective today. And I'll just open that in a single screen. So I'm going to enlarge this and just kind of take a look at what it's doing today. So it's up $2.57. It opened up and it's going down just a little bit. What I like to do is to sell a put on the put side, kind of when the market takes a little down move. Now, so there's kind of pros and cons for whether or not to trade these guys early or to wait about an hour into opening. If you trade them early, you'll get about a 20% premium on the credit that you collect. If you wait, there may be a little, you're able to kind of figure out what the market's doing for that day. I think it's 6 of one, half a dozen of another. So for the purposes of kind of coaching and training today, you know, it's taken like a little double dip here. So let's look at the puts in SPX. So this is called a 0 days to expiration trade. And the reason it's called 0 days is because it expires at the end of the day today. So it's kind of like a horse race. So at 8:30 in the morning, the horses start running. And by 3 p.m., the horses will stop and you'll have an idea. And ideally, this will go to expiration. We'll collect our entire credit. So what I like to do here is to sell about the 8 delta put. And I'm looking at here and the prices are just opening. You know, as TOS, as you're probably aware, TOS has had some challenges the last couple of days. And I know it's not just me because I talked to a lot of people. So I'm looking down here at the 9 delta. So what I like to do is get as close to 10 delta as possible, somewhere around the 8. So I'm going to look at selling this guy. And then I go 50 points wide to buy the wing. So 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. And as you notice, these used to, I could get a 50-point wide wing and just pay 5 cents for it. It looks like premium is pretty high, 20 cents here. It's probably because the perception of the market is that the risk is to the downside. So if I traded 10 contracts on here, currently the mid price is 75 cents. I'm going to jack it up to about 85 cents. Let's see what the chart's doing. It's popped up a little bit. And see, let's take it to 80 cents and see if we get a taker here. I'll hit confirm and send. So you see it takes this considerable amount of buying power. It almost takes me 49,000 of buying power to trade 10 contracts to collect $780. If I was trading one contract, that'd be $5,000 to collect about $78. So this is what's known as kind of a high probability trade. And so now I'll kind of take a look at the chart again. And the chart, you know, it looks like it's popping up a little bit. So we'll expand this chart. So it's kind of popped up. So it looks to me like it might be a decent time to put some calls on also. So we'll just kind of take a look at the call side. And so if you look down here at the 8 delta, here's a 6 delta, here's a 12 delta. So assuming those numbers are correct, you know, I'll take a little more risk here and go with the 12 delta, because to me 6 seems a little small for me, but oh well, let's take a little less risk. So we'll sell this guy. And the thing is, on the call side, you can go a little, you don't quite have to go as wide to get the nickel. So let's look at 5, 10, 15, 20, 25, 30. It looks like I might be able to get a nickel here. So I'm just going to go a 30-point wide on this guy. I'll jack it up to 40 cents. We'll see what happens. So this one will take almost 30,000 in buying power to collect a credit of $380. So I'm going to go ahead and click send on that. And we'll go up here and go under the monitor, and we're monitoring kind of those trades that are outstanding. You know, that's kind of what I'll do in more than one account, is kind of put those on, and then I'll do some price discovery to see kind of what price we can get. So let me go ahead and create a duplicate order here. And I'm going to go down here, and these are a little smaller accounts. So instead of 10 contracts, I'm going to trade 5. I'm not quite sure what the buying power is in that account. I've just blocked out account numbers here just for, since we're recording it for privacy kind of reasons. And so let me go back and I'll put the call one on, create a duplicate order. So if a person is managing multiple accounts, that's kind of makes it easy to put similar trades on in other accounts that you might have. So that's just what I'm doing right now. And I know it's probably moving fast. And if later you want me to answer questions, I can. So there's the put and the call on in that account. So I'll create a duplicate order and go here and put the same thing into this account. So now we have the puts on, and now I'll put the calls on, create a duplicate order, go here in this account and go into trade, and then I'll put this guy on. Now SPX is constantly changing, the price is changing, so occasionally it may pop up and I may massage those strike prices a little bit, but let's kind of see what the mid price is right now. And let's take a look at the VIX, because a lot of what drives how much premium we get is the perception of volatility in the overall marketplace. As you kind of see here, VIX is trading at 21.69, and it looks like TOS is kind of slow today. So it's waiting for data. No, don't cue Jeopardy music now. So anyway, that's kind of what drives a lot of the pricing here. So let's go back to, I don't know why VIX is having a hard time loading today. What I typically do is I keep multiple windows open and I can kind of watch SPX. It looks like SPX is trending up a little more today. So probably these calls I might go down to 35 and they probably would get taken. So that's what I'm going to do, I think. I'll cancel replace. This is called price discovery. And, you know, for every nickel, I'll save 50 bucks here. So it's kind of like bidding on eBay, right? Where you're kind of putting in a price that you're willing to take for it, and you got a buyer that's out there saying, here's what we're willing to give, and you're kind of massaging your price until you reach something that both of you feel good about. So you know, looks like this one is currently trading at 60 cents. I've got it up to 80, so let's just kind of massage that a little bit, and then I'll go to the other accounts and do the same thing. And a lot of times I'm also in communication with Tammy Chambliss, who's kind of a thought leader on SPX around what kind of pricing she's getting on some of hers. So it enables you kind of just to have a friend, a trading partner that you can kind of compare your results. So in the future, you and I can be trading partners, and either through text or through, do you ever use Facebook Messenger, Tammy? I'm sorry, Nancy.
No.
Yeah. So that's what Tammy and I use. Sorry for calling you Tammy. I was just multitasking here, and I guess my brain path did a crossover or something. You ever do that when you're doing multiple things at once?
So if you lose the trade today, you lose the 5,000.
Well, what we're going to do is once these fire off, we're going to put some stop losses. So I'm going to rephrase your question. Your really question is, I believe, is what's the risk on this? Is that right?
Yes.
And so after these fire off, what I'm going to do is I'm going to demonstrate a stop loss order at 3 times the credit received, which is what Tammy has shown is, by back testing, is the optimal strategy. So she's back tested 2 times, 3 times, and 4 times. So essentially, if you get stopped out, it will take you 2 other winning trades in order to break even. And I believe by putting the stop losses, the percentage of wins are somewhere between 75% and 80%. So let me tell you, it moved down a little bit. So I'm going to take these puts and bring them down. It's trading at 65. So it looks like to me, if the market kind of moves down a little bit, those 70-cent ones might get taken. So we'll see here. And I'm hoping just for educational purposes that it goes ahead and takes it so that we can put a stop loss on it. And then I can do the full demo. Sometimes I keep a little room in my account for buying power so that later in the day, if it takes a big dip down, I'll do a few more puts. If it takes a big move up, then I'll do a few more calls. It kind of does a little bit of dollar cost averaging. And if I need further buying power, I can close some of those strangles that I put in yesterday. Tammy is saying the call is showing stay away from the call side today. Huh. So because Tammy said that, she's playing around with some signals that she's using. So currently I'm not really following those signals yet, but interesting information. I think at some point I may start.
So when she says not to get into the call, so does she mean that it's not going to go down?
She believes that the risk is to the upside today.
Upside, okay.
So it shows that it's going to be a bullish market today. So for that reason, she's just going to trade the put side. Okay. Typically, lately, I've been trading both sides. Would you say in your account that you are trading it bullish or bearish or neutral?
Mine are long-term, a little bit long-term trades. So that I'm done, I'm just holding.
You're more buying and holding.
Yeah, I'm just waiting till it gets to my 50%.
So I'm going to assume that that you're trading more bullish then.
Yes.
Are you familiar at all with beta-weighted deltas?
No.
Beta-weighted deltas is kind of a way of measuring the risk in your account. And what it does is, I've got a zillion of these holdings, and a lot of times it's hard to compare one against the other. So beta-weighted deltas kind of shows you if all of this whole account was invested in SPY, I would have 75 shares of SPY. So it beta weights it against the SPY. So when SPY is currently trading at $339.03. So it kind of shows me that this is slightly bullish, but for the size of this account, that's pretty much neutral. So really, it's neutral, and what my goal is to make this $1,000 a day in theta decay. But I am pretty much market neutral, which means I don't really care if the market goes up or down. I'm just trying to make money off of theta, which is what a lot of big money managers, brokers, hedge funds.
So you're making 1,033, 1,011, right?
If average. All other things being equal, which it's kind of like Dallas traffic. I know you live at least in the Dallas area. So if traffic is all jammed up, you might make $400 that day. And if traffic is moving fast, you might make $1,400 the next day. So all it means is that for the average duration, and so we see SPX has fired off. It looks like we got 70 cents on our puts. So I'm going to kind of interrupt that conversation, and I'll go into that trade, and it looks like interfilled orders. We received 70 cents. So we received 85 cents for the put. So if you bring out your trusty calculator, I'm going to round up to 90 cents, which means my trigger is going to be 3 times that, which would be $2.70. So I'm going to go in here, and I just put the stop loss on the put side.
So stop will be 80 cents times 3?
It will be 85 cents times 3. because I collected 85 cents for the short put. Now here's kind of where it varies a little bit. Sometimes people put a 3 times on the total credit collected of 70 cents. I tend to like be a little bit more liberal in my stop losses. I don't like to get stopped off out as little. So I'm going to do a stop loss at $2.70 on this short side. So I'm going to go to this put, create a closing order. And over here where it says order in toss, I'm going to change this to stop limit. And I'm going to set my trigger here at $2.70, which means if the price of that option goes to $2.70, it will trigger it to execute. Then I'm going to set the top one at 30 cents away at $3. So it triggers at $2.70. The most it will get out is $3. And let me explain why we do that. In a fast moving market, sometimes it will blow through your stop loss and and it won't work, which could be dangerous in terms of losses, right? I don't want a $50,000 loss here. I just want, a $3,000 loss if it goes against me here. So I'm going to kind of confirm and send. So then it becomes my max loss here is $3,000. So now I have that spread on the puts, and I've got a stop loss on the call side. So it shows you that currently the mid price of that is 85 cents. And that one trade gave me positive 664 beta weighted deltas. So you can see I was neutral, and now all of a sudden my account becomes bullish just because of that one trade, because SPX is such a large underlying. And I do not put stop losses on, but because SPX trades for $3,393 a share, it's a big underlying, it becomes more dangerous not to.
So now you put the stop loss only on the short side.
I put the stop loss only on the short side. Yes. So that is a demonstration. So now what I'm going to do is I'm going to go to the other accounts that SPX traded at. And I'm also going to put that same stop loss here. So I traded 5 contracts here. So I'll create a closing order. Stop limit, $2.70, $3.
Let's do that. Okay.
Thank you. It's always good to have a second pair of eyes. I'll go to this third one, and it fired off, it filled. So I'll go to SPX, the short side, create closing order, stop limit, $2.70, $3. So this is kind of what every Monday, Wednesday, and Friday looks like for me. I might vary the number of contracts based upon what my current buying power looks like in a particular account. I might look through my other accounts, see if there's a way for me to capture a little buying power, because I like to do this trade. So what questions do you have?
Nothing that maybe I will have when I put it on.
Okay, you're going to put one on in your paper trader?
Yes.
Yeah. And I'm not even aware if the paper trader allows stop losses. I would guess it probably does not. So you can at least watch it manually or take it to expiration and just see. I believe if you take it to expiration, your probabilities are a little better than 80% that you just keep the premium. So that's kind of completes it for the SPX.
Okay.
Now, would you rather go ahead and put one on in paper trader, and maybe this
Yes.
afternoon we could maybe have another discussion, kind of see
Sure.
how it's doing,
Sure.
and perhaps put on a strangle at that time?
Sure.
Okay, so why don't we go ahead then, and we'll just stop our recording, and then we can, I'll stop the share, and we can stop the recording, and we'll be back on later on this afternoon to kind of look at how we're doing.
Sure.
Does that sound good?